Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, briefly we start with the Asian stocks, which actually closed sharply lower on Wednesday. After of course Wall Street sold off as much as 2% overnight on a plunge in oil prices. Japan's Nikkei 225 index dropped 559.43 points or 3.15% to 17.191. Bank of Japan Governor Kuroda said the central bank has ample room to expand stimulus further and is prepared to cut interest rates deeper into negative territory. Of course, that was the report early on Wednesday. Chinese markets followed the rest of Asia lower, but the Shanghai Composite retraced losses to close down 9.72 points or 0.35% at 2,739. European equities are expected to follow their US and Asian counterparts lower on Wednesday as oil prices retreat again. The London FTSE 100 is expected to open 45 points lower at 58.77 and German DAX down 84 points at 94.97 and the French CAC down 34 points at 42.50. The yen edged higher against the dollar again on Wednesday as falling oil prices sparked an investor's flight to safe assets. Now, driving down the U.S. debt yields to 10-month lows and dueling the greenback's appeal. Of course, the dollar fell 0.3% to 119.64 yen, pulling away from a 6-week high of 121.70 yen set on Friday after the Bank of Japan stunned the markets by adopting a negative interest rate policy. Moving to the Eurozone, the shared currency over there eased 0.1% to 1.0915, but was still up around 0.8% so far this week. The 10-year US Treasury yields fell 1.828% at 1 point on Wednesday and lowest since April 2015. Such falls in US yields are in result of concerns about slowing US economy and growing investors' doubt about how much the Federal Reserve can raise interest rates this year have, of course, posed headwinds for the dollar. Gold in the commodity sector trimmed its gains on Tuesday afternoon after touching 3-month high in the morning. This was underpinned by global growth concerns and as another sharp drop in oil prices pushed investors' safe haven assets. With weak Chinese manufacturing data on Monday underscored the challenges for the world economy, while of course volatility in oil and other assets fueled the interest in gold as a safe haven from market turmoil. There had been some short covering as well in the gold market. Of course, as traders who at the turn of the year had expected 4 U.S. interest rate rise this year, were now less sure the Federal Reserve would tighten monetary policy so much. The yellow metal touched 1131.40 an ounce yesterday. This was its strongest since November 3rd. But of course, it turned negative to trade down 0.11% at 1127. Oil futures in the oil market extended losses into a third session in Asian trade on Wednesday as U.S. crude stocks last week surged to more than 500 million barrels, and of course as Iran plans to boost exports from March. West Texas Intermediate fell 27 cents to 29.61 after ending the previous session down $1.74 or 5.5%. U.S. crude stocks rose by 3.8 million barrels to 500.4 million in the week to January 21. Data showed from industry as from American Petroleum Institute on Tuesday. Weekly inventory data, however, from the U.S. Department of Energy's Energy Information Administration is due later today on Wednesday. And the most important and volatile news today in the calendar at 13:15, US ADP employment change and ISM Non-Manufacturing PMI data at 15. That's all for today. Stay tuned. It's an important day and volatile on the majors as well. Thank you for watching. See you next time. Bye-bye.